So welcome everybody. Good morning, good afternoon, good evening. We can start. I'm Giuseppe Basile, also known as the Fib Stalker. I'm a full-time trader, market strategist and mentor, and I'm a premium contributor to FX Street. And today we're going to complete this series with the third part of how to trade profitably without fear and slow trial and error. Now, we covered a lot of ground. To me, it's been very interesting, and we covered a number of steps, 5 steps so far. Sorry, 4 steps so far, and one secret. So today we're going to complete. We're going to cover the remaining 3 steps and 2 secrets to average 2 digits per month. I mentioned here 30% or a month or beyond because that's what we have averaged in the last few months. Many of my students. So if you want to join us in our trading room, please do so. So we actually covered a number of steps that you have to master if you have any of these problems that we mentioned at the very beginning. You've lost between 3 to 6 thousand or more in a period of 3 to 6 months. Welcome everybody. I see in the meantime other people coming in: Sandra, William, Penny, Bobby, Adam. And you start every month filled with uncertainty about where the next trading opportunity is coming from, or you don't have a strategy or confidence in one strategy, or don't know where to put stop, how to size your position, and where to take profits. You use any or multiple indicators. I'm not really a big fan of indicators. I'm not saying that you cannot use them successfully, but many people use indicators and they've not tested them totally. When you put 2, 3, or more indicators on your charts, the combinations start becoming really a lot. And or maybe you are impatient, so you don't let your trade run. You're afraid to execute. You trade too often. That's a big problem. And basically, I want to remind you that 70% of the time the market is doing just nothing, and then it starts trending again, and that's where the easy money is. Okay. And of course, there is always lack of confidence and the presence of psychological losses, which are really not accepting the risk. And that's I like to remember that's principle number 3 of consistency. If you don't accept the risk, you should not really take the trade. Or maybe you're uncertain about market direction and don't have a step-by-step procedure to analyze the markets and understand what the major players are doing, how they are positioned. And I focus on 2 major players: the dump money and the smart money. You don't know how to identify low risk opportunities, create a trading plan and time entries when you identify potential setups. And that happened to me in the past. I went through boom and bust cycles. I had a sequence of winners, and then when the market started stopped the trending, actually I just kept trading the same way, and that's when you have your bust cycles. Okay, you don't know how to manage risk and protect your gains and add to existing position to boost winners. That's very important as well, especially again when there are trends. If you try to do that when there are no trends or the market is not moving, then we go back to the previous problems. Or you don't understand what is sabotaging you from a psychological viewpoint and don't know how to work with your discipline psychology. We mentioned in part 2 that, and part 1 as well, that many people focus on gains and methods and gains in trading, especially when they start, and they don't realize that they should start on the most boring and most important parts, which are risk and psychology. Nobody wants to focus on risks when it comes to trading. Okay, now we closed last week with step 4, And we spoke about having a process that allows you to do price analysis as well as price discovery, which really trying to project what's going to happen next on the charts. And I also mentioned the process of trading as a funneling system that produces valid trading ideas, which are then submitted to your trading system. So this is an idea of my process. Very high level here. We have first price structure analysis that looks at all the time frames, and it actually feedbacks the higher and the lower time frames with the discovery in a specific time frame. That produces trading ideas as well as information that gets into the price discovery, which is another process where we apply patterns and rules to the information that we gathered from price structure analysis, and then we actually take those plan and trading ideas and filter them, and we generate validated trading plans, and then we put them into our trading system. So this is my process, and it's something that is repeatable, and actually, I do this now almost automatically when I look at charts. And we also spoke about trading systems. Now, in my case, the trading systems are very simple because they actually get trading idea which are already filtered to the process. And the major focus on the trading system is really on timing, and we can have different timing techniques. I spoke about that as well. The trading system needs to be adapted to trader style and preferences. If you, like me, like to trade, to swing trade, or trade on the larger time frame, I trade on the smaller time frame as well, but not often. I did that more in the past. I don't need to do that now. And whenever you have a trading system, you cannot just be discretionary. You have to write the rules on a piece of paper. And I also mentioned that typically there are 10 parts of a trading system, right? And you might recognize some of them. Identify the market, identify the direction, long or short, setup and filters, which are specific rules on a setup, how to enter, protected stop. You can have volatility stops as well, and I have one technique that puts together volatility stops and protected stops, and I'm going to talk about that in the future here on FX as well. So entry, there can be a re-entry as well, of course, partial profits or profit taking, exiting, position sizing, and then we have two parts that are only relevant if you really use multiple systems, okay? And basically, how do you distribute your positions and your capital and your risk on different systems, and whether you activate or deactivate specific systems. So my specification is very simple, typical 2 to 3 pages, and look like something like this. Okay, in the future I'll present my trading system, future trading system 0, also on FX Rate. So let's continue. Let's look at step 5. This is very, very important. As I mentioned before, many people focus on gains when it comes to trading, okay? But the reality is that we should really focus on risk and the psychology of trading. So the trading psychology and discipline are really the sore point when it comes to trading, and really the psychology will make or break you as a trader. And I agree, totally agree, and discovered that one of my mentor, Van Tarp, said in the past, he said, psychology is 80% of trading success, and that's really true. You really realize that. The point is that when you start, you're really attracted by the by price, by the idea and the fun of making money, and you really don't understand that. So you can have all the other components that we defined before in the trading plan, or the system, or the analysis process and price discovery. But if you don't fix your psychology and work on your discipline, you will hardly be successful. In fact, many people are excited by trading. I was excited by trading at the very beginning when I started. But then I realized that most of the time I need to sit tight, need to do nothing at all, and it's very difficult when you have the possibility to make money every day, right? But as I mentioned before, 70% of the time the market is not doing anything. So if you're not able to sit tight and do nothing, and maybe don't take a trade for days, then it's difficult, and that's why it's difficult, hard to be successful. Why 90 to 95% of people then lose consistently. So many people don't want to work on psychology and prefer to think their problem is elsewhere, often under the methodology, but the methodology is only one aspect of it. This is not the case because the methodology is one of the simplest aspects of trading, believe it or not. Often what we don't like working on is what we need the most, right? So if we don't like to work on psychology, then typically we don't develop it, and then that's why we need it the most. So what we focus on, as they say, develop. So if we don't focus on the psychology of trading because we don't like it, it doesn't change and it does not improve. So this is why they get an important amount of time working on psychology. That might include many things, including journaling, for example. Do you remember the sixth principle of consistent trading? Well, let me remind you what it says. I continually monitor my susceptibility to making errors, which means that I you have to keep a tab on yourself and your trading at all times. Psychology is a very important chapter of successful trading, and there are several aspects to learn, monitor, and know about. Okay, so in trading, the only person who can sabotage yourself it's really you, because nobody's stealing the money to you. Sometimes I told to people, or I have people in my room, or in other forums, and every now and then I hear that piece of there of people who say the brokers, the professionals that are out there to catch us. There is no such a thing. We actually create our own success or our own demise. We, with our action, give or take money from the market. So this is very, very important. Okay. For this reason, you must know yourself well and be aware on how your existing beliefs allow you to interact with the external environment, which is the market, including the markets, right, and including everything else in your life. So you also need to understand how you perceive the markets, and from which frame of mind. That's very, very important. And I want to say that sometimes when I do the analysis or spend too much time on on the markets, on price. I mean, I start developing ideas of what should happen next, why the dollar should continue lower, and so on and so on, for example, right? So whenever you do something like that, you lock yourself into a view, and what happens is that you start filtering out information from the charts. Okay, so you will act to confirm your view, not to confirm, not to read objectively the markets. Okay, so that's something that we have to avoid. Very, very important. Now, working with beliefs and what you believe about the market is very important, essential to trading. Van Tarp famously said, "We don't trade the markets; we trade our beliefs about the markets." Right? I mean, whatever we believe the market should do, it will do. If you believe something, then that something is that for you, and that's the same for the markets. As long as that with the markets, I mean, that's very, very dangerous. When I work with traders and do beliefs assessment, I use lists of questions divided in many, many categories, at least 4 beliefs about the markets, about trading, about self and belief about the trading systems. Okay, and that's very, very important. I also have many tools to work with beliefs, and we use them continuously. Now, these tools might include, mental models, beliefs, questionnaires, objective setting. Very, very important, because you will also end up doing what you believe you can do in the markets as well, and that's very, very important as well. Then we use interviews, profitability and consistency journey, journaling, trading meta skills, tracker tools, techniques for effective changes as well. Now, luckily, there is only about 10 important types of trading errors, which justify basically 80% of the losing performance. This is really the 80-20 principles that are applied to trading mistakes, whereas 20% of our mistakes are responsible for 80% of our losing performance. Okay. Now, examples of mistakes are refusing to define a loss, over trading, hesitating to take the trade, especially if you are not confident, not taking losses, focusing on monetary value rather than potential of a setup. And whenever that happened to you, when you start calculating how much money you are gonna make on this position, that's the time you have to really do an objective assessment of the market. And if you are only filtering out the information you want to see, filtering in and leaving out the information you don't want to see, you have to be very careful, and that sometimes is an indication that you should reduce your trade, your position, or just exit right away. So each of these errors has a fix and a workaround, and I like asking my students what they think are the three major pain areas when they have, because we can find the origin and start working on the solution and have some quick win very, very quickly. Okay. Now, beliefs are very, very important. And see, if you have underestimated psychology till now, let me tell you that beliefs are like animals living in our mental environment, resulting from past experience, associations, and emotional events. Okay, very, very important. Beliefs can be charged positively or negatively. The higher the charge, the stronger the effect, and the bigger the effect, and which often it's filtering out information you don't want to see on the market. So, for example, I made the example of the dollar index before, but that applies with anything else. We all follow the dollar index. Very, very important when you trade forex, right? Now, if you convince yourself that the dollar index must go down or must go upwards, right? What is going to happen is that you're so convinced, so you have beliefs about it, and those beliefs are going to filter information that suggests the opposite. So you're going to create your own demise. So beliefs are responsible for very important effects. The activation of the perception filters, as I mentioned now, that can cause your brain to perceive only part of the information. Imagine how dangerous that is in trading. Okay, now the way to work with beliefs is to first recognize them, and then you keep monitoring yourself and applying a number of mental techniques to reduce their associated energy. And so we can weaken them progressively again and again and again until they are rendered unharmful. So think of it's like discharging a battery. Think of and let me make you an example. Okay, think of Santa Claus. The belief is still in our mind, but it's not positively charged as it was when we were kids. We have the idea of Santa Claus. We don't believe in Santa Claus anymore, unless you still do. Let me know if you do. All right, and so the most harmful beliefs, of course, are those that we don't know we have, and there is such a thing as well. Now, this is why working with a mentor may be a good idea. Doing constant peer reviews helps eradicating wrong beliefs or beliefs that are not conducive to trading. And believe me on this, pun intended. The reason why people lose money is not because of the method. It's not because they don't know what to do. You keep yourself at one thing for long enough, and eventually you'll master it. It's like they say, you hang outside a barber shop, and eventually you'll get a haircut. With trading is the same. With the method, with the timing is the same. Why people trading 10, 15, 20 years have not mastered trading yet? It's not because of the methods. They've seen many good methods. It's because they have not eradicated those beliefs that are not conducive to trading. Okay, that's to successful trading. That's the important thing. So, for instance, many people believe intraday trading or scalping is the best way to go. It might be, but then with time, you lose energy, you lose the will to stay hours and hours, and your concentration also kind of disappears after a few hours. In reality, delaying gratification, exercising patience, and trading in the larger time frame uh, often is the way to go, and it's really where the big money is. And as I mentioned before, delaying gratification. I mean, 70% of the time the market is doing nothing, and you should not be trading. You should be doing something different. Okay, and that's why I also use and contribute to FX Street, because this keeps me busy when there's nothing to do in the market. Working with a mentor has two advantages. You can deny or lie to yourself that you have a psychological or discipline problem, but what you say and what you do will eventually always betray you. And you can tell the real story that a mentor can see and read thanks to experience, because you don't have to tell certain things. Your results also speak for you. We establish or remove beliefs interacting with authority figures. That's another point as well, right? Your parents, when you were a kid, your teachers during your high school, your boss at work, and your public administrators in our society. We all create and modify our beliefs based on our interaction with authorities, right? A good mentor can be your authority in trading, your authority figure to form and shape proper beliefs that are conductive to successful trading, and that's the key right now. Self-discipline is a word that describes a process of learning how to take conscious control of your actions, and you need that in trading, right? It is a specific thought methodology and a mental resource that can be used to change a belief or a belief system that is in conflict with a goal, like for instance making money in the markets. A typical example of many students that come to me is that they have profound, deep beliefs about the use of indicators in the markets, and then we start talking about price structure and how in reality the algorithms of professionals and big banks and big players really establish and continue trends, and some of them they can make the shift. Some of them are so radicated in the fact that in the way they look at the market through indicators that they're never able to make that change. Self-discipline is a more direct method of effecting some changes, because you purposefully act in a manner that is in direct conflict with whatever you want to change. And of course, when you want to do that, you have to deal with the emotional discomfort in doing so. For example, when you want to abandon um, trading systems, indicators, right? You never abandon trading systems, especially if they're good ones. It is willfully um, behaving outside the boundaries of some of your beliefs when you apply self-discipline. That's what you have to do. For example, I ask my students to suspend their beliefs about trading without indicators and the need of indicators, and only looking at price on the charts. And if you work outside that beliefs long enough, it will eventually de-energize. And that's why self-discipline can be very useful also to work with beliefs, provided you recognize the belief. So willful people have an advantage in trading, because they can actually de-energize non-usable beliefs, non-usable beliefs at a higher rate, at a faster rate. But again, beliefs are non-physical, are really energy in our mental environment. And working with beliefs is not really a function of time, but rather the intensity and the result of your willingness. Okay, that's very, very important. This may seem a little bit too very unpractical to you, or something that you might ask, why the Philip Stalker is talking about these things. I mean, I thought we would speak about charts and methods. Yes, we spoke about those things, but remember, in trading, psychology is the most important thing. With self-discipline, you can identify definitions of yourself and changing them by asking whether such beliefs are conducted to trading. My approach is very practical, right? I mean, and the question is very simple. Is it what I believe about this market, about this aspect of trading, this part of my trading system, this part of my plan, true and conductive, even if we don't even want to establish truth, okay? To be honest with you, I don't care if something is true or not when it comes to trading. I just want to have beliefs that are conductive to successful trading. If they're an obstacle and they then I need to create a mental resource to change those unuseful beliefs. Okay, that's the way I see it. I mean, it's a very practical thing to me. Now let's look at the 6 steps here. Six step here, key step, and that's about improvement and becoming more and more and more successful. And that requires that you continuously measure your performance and monitor yourself. Okay, so in my trading and in my mentoring, I have developed a model that actually I also presented on FS Suite as well. It's called the Profitability and Consistency series, and you wanna watch that series. And you acquire the tools and techniques first. That's what we saw so far. Steps 1 to 4, and then number 5 is focusing on psychology. And once you acquire the tools, the methods, the timing, price analysis process, price discovery process, the system, the techniques to work with your psychology and self-discipline, you're ready to push your journey to reach profitability. Okay, and profitability is really about techniques mainly. In fact, profitability has to do more with price, the tools and techniques, and the ability of make distinctions on price. It will also require consistent execution and discipline to be prepared to perform or follow the analysis, to establish a trading routine, to execute properly. Okay. Now, consistency, on the other hand, it's deals with deals with your mental environments. It's really consistency requires that you bring your game to another level. It deals with your objectives in trading, your market beliefs that we mentioned before, your missions and values, very, very important as well, because they give you motivation. And continuous improvement deals with trading consistency as well, okay? Now, the way I like to represent all this is using a diagram. In here, I show the path to profitability first, and then the move from profitability to consistency. So our profitability is really this level here, okay? And when we start and we have no experience, if you're a new trader, that's where you are. And now you have to, as traders, what do we do? This is the process. We discover something, then we find a new problem, we solve the problem, we go and we actually go to the next problem, we solve it, and we go around and around and around. And each time we solve this problem, we actually conquer and we are able to do a price distinction, a market distinction, some sort of distinction in what we observe, right? And make enough of this distinction. It's like getting the haircut, and you eventually will have an understanding and a method that allows you to become profitable. Profitable means that you make money, you lose money. You make money, you lose money. You're really at the boundary there. And because of the cost of trading, like commissions or in Forex spread and swaps and so on, you are slowly losing money, right? Now, the process of reaching success in trading can be seen as facing and solving hundreds of, if not thousands of little problems. These are the little problems that you see here. And in the lower part, what I just mentioned, now we deal with the mechanics of trading and price dynamics. So we deal with things like the trading method and the timing. It's the least important part. Money management, very, very important part. Risk management, paramount. Trader's job number 1. And then the psychology of the market, how the market moves and why it moves as it moves, right? And as we go up in this process and we start becoming profitable. Then we start looking at rules and trading system, the psychology of the trader. We need to start working on that. Of course, we test and paper trade any idea that we get, including all the ideas I give you. You have to test them for yourself and what they mean to you as well. And then we start developing confidence, and eventually, we start tuning what we do when we reach profitability. Okay. Now, each new observation, as I mentioned before, and distinction, we are able to make on price propels us upward in this model of profitability and consistency. Okay, we are going this direction, not the opposite direction. And once we solve a sufficient number of little problems, we have a method that allows us to be profitable. The problem now becomes consistency. Okay, so this part of the game, it's pretty easy, I would say. Of course, you need experience, you need time to dedicate, you need the right methods, the right timing, the right components. But the fun starts, so to speak, starts when we arrive to our profitability level, and now we want to reach consistency. Now, consistency requires to play the game at a completely different and higher level, totally different. We are dealing with our mental environment now and our beliefs. So we're not dealing anymore with price. We are dealing with what that price means to us. The problems you have to solve are related to our, values, discharging beliefs, as I mentioned before, that are not useful to trading, or forming new beliefs that are conductive to successful trading, and dealing with a number of other things: objectives, psychology, biases, discipline. And mental models can help with that. Okay, I hope you appreciate the beauty of this. You are intrigued as much as I am, and as you can see here in the upper part of this model, to reach consistency, we do not speak about the method anymore and what we have to do, which ends here. Here we talk about mission and values, market beliefs. We need to be able to work with them. What are our objectives? Very often we try to do much more than what we should be doing to reach our objectives. And then we measure ourselves and we calculate statistics and apply game theory, and eventually we can do this as a cycle, and eventually we improve and reach consistency. So I hope this makes sense. I mean, this little model here, I mean, it helped me a lot trying to explain what really trading is and how we reach profitability and consistency. Okay, now what we need to measure, a few things. In order to improve, we need to measure our performance and know what to measure. And there are measures like reliability, expectancy, expectunity, and system quality that are important measures. And the interesting part of this is that these measures do not only apply to a trading system or rules of a trading system. These methods apply to you as well, meaning that you can use these measures to measure the outcome of your own trading as well. Okay, so these measures apply to trading system and to traders alike. What I mean is that they also help you measure yourself, how you apply the trading system, and the performance that shows up in the results of your multiples of risk that you generate in your trading. Okay, you can test the trading system and the way you apply it by paper trading. That's very, very important, especially if you are starting. Before putting on your hard-earned money, you also need to gather data that is actually in actual testing that will go a long way in helping you to improve. I recommend testing in group of 30 trades. That's very important, which is a number that is statistically significant in many, many fields, which means you can extract meaningful information from measurements of at least 30 trades. Okay, so if you today you wanna say you don't know how you're doing, what you do, you start today, you open Excel and you write in all the trades that you take. You take 30 of trades. Don't rush to get your block of trades complete as soon as possible, because you need to follow your edge, right? Now, if you don't have an edge, or if you're a discretionary trader, of course, you'll try to trade everything that is under the sun, and that's not a good approach in any case. But You test or paper trade more markets instead of focusing on the same markets and trying to find opportunities in the same markets where they're not. So there are many reasons to test and gather data, which is really a precious asset in trading. It's a precious asset in anything, but in trading is very, very important because it can save you thousands and thousands of dollars. The most important of the aspects of gathering data is, of course, building confidence in a method or trading system, or in your ability of executing it. It is a gradual process and gives you a gradual growth. So you understand what you're trading, you then test it, you paper trade it, you tweak your trading, you maybe start doing real trading with a small risk, 0.1, 0.2%, you gather data, you optimize, and so on, and you repeat the process. It's a step-by-step process. Now, continuous improvement is much above what you know, but also is about how you do analyze and execute trades, and so it's really about who you are in terms of your beliefs that drive you when you execute the trades. Okay, so all these things, they seem theoretical here, but we're not speaking theory, guys. This is a very, very important and relevant aspects of trading. Okay, so I hope you appreciate that, because many people, when I start speaking about these things, they just shut off and they start chatting and they start looking at other websites. I mean, this is really, really the most important part of trading. Now, the top and most important part of the mental model that you have to use, and I use to reach profitability and consistency, deals with improvement. And I showed that in the picture before. Here are the main areas of the model that are related to continuous improvement. Remember, this was the top panel in that model. And as you can see, there are aspects related to measurement performance, like calculation of statistics or simulations. I like to do Monte Carlo simulations with the outcomes of my trading that apply game theory. And although this is very advanced and not required, like as I mentioned, Monte Carlo simulation, this gives you really a good understanding of what you're doing and what could happen. So, for example, you can project the probability that you will have X trades losses in a row, and that's very, very important to know. Or what's your probability of losing 50%, 15% in a sequence of losing trades, right? Just to make an example. So your trading objectives, your market beliefs, and your mission's value, and why you want to trade are also important aspect of this. Okay, now it may seem that these aspects, again, I want to repeat this. I want to repeat myself. It may seem that these aspects are secondary. I see someone is coming in late here, and are related to trading, but there is a reason why they are in this model. Okay, you cannot improve without them, because ultimately you are the trader, and all the trading business depends on your motivation. By the way, trading is a business, is not a pastime. Okay, so you can start this as a pastime, but then at some point you have to make a decision. If you want to learn trading, you need to invest in it in terms of time, in terms of money, and so on. So last and very important point I want to make: consistency cannot be reached without shortcuts and without some level of personal growth. Okay, I mean, trading, it's all about growing as a person, and this might not apply to you, or not yet, or you have gone beyond that already, but often applies to many who have struggled for years with trading. Trading objectives should also be aligned to your current level of development. Well, one mistake I made in the past is that I believe I could trade at a level that is much more advanced than the level I was at the moment. Okay, So that's also important. And always play the trading game at the level that allows your subconscious also to catch up. For example, when we have a good series of 10 positive trades, what would happen in the past is that I started thinking and that I crunched it, and I'm now able to make millions. I'm not really interested in millions or in billions, but I could make really a lot of money, right? The point is that if that's the result of a new level of proficiency, then you need to let your subconscious to adapt to it without faking expertise and thinking that you have got it this time without having letting that time pass. Okay, this is very, very important. There might just be one or more distinctions you are able to make on price rather than finally being able to master it. Okay, now let's look at the other two trading secrets that that I promised you in this series. And we already spoke about the importance of risk management and advanced money management for reaching trading objectives. And this is, I want to repeat here again, risk management and money management are two different things. Okay, sometimes I hear, very often, way too often, I hear people talking about money management, and that includes everything. So start making this distinction for you. This is going to help your trading. Risk management is to protect capital. Full stop. There is no other objective for that. Money management is to magnify profits. Our first objective is to manage risk. Anything can happen in the market. Fundamental truth of trading, number one, risk management is your job number one. In fact, I define my job as a trader as basically the ability consistently to generate risk-free trades. That's my definition of a trader. If you ask me what is a trader, who is a trader? Someone who's able to generate consistently risk-free opportunities. Okay, we spoke about risk-free in the last part 2. If you've not watched that, please do. Very, very important. And the other two secrets I want to deal with are really related to the ability of magnifying profits, which is secrets number 2. Large profits require trading trends and adding to 4 hour or 1 hour. You can add to any time frame, really. I just put them here as an example multiple times. Okay, and you may say, Giuseppe, I'm not yet there yet because I still need to master a method that works, and I need to work on my execution skills. I need to become consistent first. Yes, but you have to keep this in mind. Large profit require trading trends, and if you don't want to add to them, you have to stop here at least, which means that you need to stick with your position and try to bring it to target. That's where the money is. It's not in trying to make a 1-2 reward to risk. Okay, I mean, if you can do this consistently and you like to trade a lot, which means you risk a lot, the more you trade, the more you risk, then it's still okay. But we really want to do the 1-10. That's when by sticking to trends, we can really create wealth. And you can have a mixed approach, whereas you have some of these trades, many of these trades, and some of this, and that's where really the wealth building is. Okay, secret 3 is traditional tech analysis is of little no use in trading, believe it or not, because more often than not, the methods you are trading have a 50% edge, which really are random. The outcome is random, and the reason why people are successful with trading is that because of superior psychology and superior skills in risk and money management. And few people realize that. And there was a new member a few months ago, I think it was November, came in the trading room and said, "Wow, guys, I mean, you are doing 25, 30% a month. Actually, we had 1 week at the beginning of February. We did that in 1 week. The point is, and he was saying, I trade 10 years, I'm trading, and I never saw something more than 20%. And that to me explains and gives me actually a confirmation of this. And the reason is that, when you don't have a big edge or a random edge, then 20%, which is still very good in a month, it's your cap, because if you do consistently 1 to 2, how many of them you can do, right? If you never do the 1 to 10, risking one and getting 10 times your risk, then it's very difficult to go above that. But it's very possible to do it. And what I tell people is that you must understand how smart money, algorithms, and dump money, the tech analysis crowd affect price and their psychology. Okay, so these are the secrets, and let's talk a little bit more about them. So we spoke about risk-free trading, so I invite you to review part 2. Now, adding to a sustained trend and trading trends, it's very, very important, okay? Inexperienced traders and the majority of traders do not like risk-free trading because it reduces profits, while it is the most important thing they should be doing, okay? And not risk. Can you see it? As traders, we need to manage the risk first. If you think of profits, first your mental framework does not reflect the nature of the market. Now, once you manage risk, adding to a trend is more important than finding the one perfect entry. Okay, you may be imperfect when it comes to trading. If you're in a trend, the market will be forgiving. So finding the starting point as a sustained trend is key in trading. Okay, but it is even more important to learn to add and stay with an existing trend. And adding to trends allows applying different risk-free trading strategies and taking partial or locking profits. Let me show you an example that we traded in the room in December 2017. Now, the entry, this is the euro dollar, and this is a 4-hour time frame. The entry was around here because the trend higher had failed, and algorithms showed that to us. Now, this was the first area, and you could add twice or more in here. Now, the way it works is that you could add one position and try to keep and bring it to the target, and the target was your opposing 50% move, where algorithms were waiting for price to test price, and actually they tested price, and eventually this market also inverted direction. But you could also add another time and take that profit and take that position out very, very early, actually, after a multiple of your risk was actually made, and that's where we took that second position out. Now, we also added in this area here using dump money on the 4-hour time frame, which are these pink areas here. And again, you could add twice, one to bring price into the targets, and the second time to bring the price to a target that is a multiple of your initial risk. Okay, the third add was in this area, and you could add twice, but we only added once because the target is very, very close. The target was above the 117.56 level, which is the 50% Philip Stalker level of the longs that were waiting price on the daily. Okay, so now what would have happened if, let's say, price was going in here and then retrace suddenly, right? We would have taken the partials out here, that one of the position out, and this would have more than covered to any losses that we would have had with the other position, which was this position here that we wanted to bring to the first target. Okay, so this is an example how you add, and there are different ways of adding. You can add based on volatility, you can add based on risk, you can add based on additional signals that are given to you in the trend. And this is very, very important. You must learn to read price as well. And the reason why we actually were able to trade this is because we knew that the trend higher failed, and the sequence of measured move, which is respected by algorithms, showed that to us, and then a move lower has started to another level that was a level of potential support or area where algorithms could come in. Now you must learn to read price. That's also secret number 3. Forget indicators, or at least suspend your beliefs about indicators and start focusing on learning how to read price. Profitable trading is about understanding how and who moves price. Okay, there's a lot of focus on the the methods, but successful trading is not about finding the best combination of indicators or developing the most advanced expert advisor. Okay, doing so is not impossible, but it's quite complex and can only capture certain market conditions. What we need to do is to learn to read price. Any flavor of trading using indicators, price action, other techniques, manual or automated, will always give late entries and actually make risk management more difficult. I see some question marks there. Yes, if you have any questions, just let me know, and I think I'll continue. Let me know if there is anything after this webinar, because if not, I'll just continue, as I want to close this this series here. Okay, please let me know if there is anything after. Jesus, if you have any questions, go ahead, write them down. Just an example of there are many ways of using indicators or using ways and approaches to trading, price action, for example, and other techniques, manual or automated. But very often they give late entries that make risk management more difficult. In one of the next webinars, I usually alternate webinars where I speak about more methodological topics, and then I go back to charts and we analyze market and we identify opportunities. And I'll show you the difference between trading a pin bar, for example, and trading the Fibstalker levels. The pin bar example, you have to wait for the bar to complete, and also divergences, you have to wait for the divergence to complete. Okay, and if you trade divergences on large time frames, you have to wait 1 or 2 days to have a confirmation, right? So, but fearless, consistent, and profitable trading is about building skills and understanding how price moves and who moves price. There are 2 groups of players. I don't know if you ever heard about them or in which form you have heard about them. I call them smart money and algorithms and professional traders who actually start and push and maintain trends. And trends are always started on larger time frames, monthly, weekly, daily. And then there is dump money, which actually either follows or obstacles temporarily trends. If the trend is initiated in a very large time frame, dump money can only obstacle the movement of price for some time. And very often dump money follows. On the smaller time frame and also larger time frame, dump money sometimes can sustain trends as well, participate to sustaining trends. So smart money, it's always right. Dump money is not always wrong. They can be right as well, but usually they oppose. They see the existing move, the previous move, and they actually continue with the same move. Okay, so now while smart and dump money does not explain 100% of price, and nothing does, by the way, the 2 models allow capturing most of the trends on the weekly and daily. And as I mentioned before, it is important that you understand when a trend is starting and when it is actually in play, so that you can basically continue riding the trend. Okay. Compatibly also, what are your in Forex, what are your swap costs as well. So smart money models help define reliable targets as well, which dump money cannot do. And in this example, I'm showing you something that actually we have traded in the Asian trading room back, in 2016 here on FX Street, by the way. The trading FX room. I don't know if any of you have ever been there for a few months. We ran that at the beginning of 2016. So there are here some calls that I made in that context as well. And the first one was a short of the US dollar Japanese yen. This is US dollar Japanese yen weekly. And we captured it here, and we had two targets. I actually had the first target, but the market continued the second target. Then we traced from lows to whatever new lows were traced. And before the facts, 2 weeks before, also here there were around 2 weeks before, we identified this 120.92. And note also how dump money was also sustaining this move lower. In this case, dump money was sustaining it because these two simple moving average here were positioned for a continuation lower. Same thing in here and same thing in here. So we were able to capture this before the fact. And actually I mentioned one of these two also live in one of my webinars. So if you go back to April, May 2016 and you watch the webinars, you'll see that we made this call while this was happening, where market was really here around these levels. Okay, so so where is the price modeling in this example? It's actually basically identifying these areas where smart money can come in, and so they test price, and they test price successfully here. So this area here and this area here, as well as dump money that actually is positioned for a continuation lower in here, in here, in here. Now notice here, this is very, very important. At some point, price went to trade into the opposing weekly long, okay, which is here. And look at what happened here. We had a confirmation of these longs, and that happened when we traced from lows to new lows, and price broke the 61.8% level. That's one of the models we use. And by the way, if you want to learn more about this, go to philipstalkertrading.com/free, and you can get my 6 hours free course about modeling the smart money. Okay, so what we learned here is that at some point, the algorithms and professional money managers, they wanted to, and they were already long the euro. But dump money, look at how dump money thinks, right? They actually saw this big move lower, right? And a lot of dump money, what does? They look at what happened in the last few months, and they just keep selling. They keep selling. They keep selling. But in this specific case, they were selling against the smart money that was already positioning long. And in fact, they were using this volume short here to actually fill in their long positions. Can you see how smart money uses dump money when it comes to reversal? Of course, after that, because smart money has much more power on the larger time frame, the market reversed. Okay, you can go and look at the charts. And so this gives you an idea why it's important to read price, why you cannot just use indicators that give information without any kind of context. You have to have context in trading, okay? Does it make sense? Give me a yes if this makes sense to you. Give me a no if it does not make any sense to you. Okay, so this is one of the secrets, because a lot of people, when they start trading, they actually only look at indicators and models that are very simple. Bobby saying makes sense. Thanks, very good. I'm happy I was able to. So why this is a secret? Because people don't even see this, don't even notice. They just start focusing on what the industry gives to them. which is, indicators, a certain ways of looking at the market, the books. I'm not saying that you cannot be successful with that, but your success will come more from, the way you govern risk and money management and your psychology rather than the method. If you want to have something that really gives you uh, um, an edge in the market because you know what's going on, you need models that actually define a structure in price. Okay, so we looked at some paradigm shifts in trading in this series. Okay, and I will just continue here, if you don't mind. Give me a yes if I can continue, and you can stay so we can close this. I hope this little known trading secrets, somehow helped you on the way of initiating an important paradigm shifts. That's very, very important. Bob is saying yes, so I'm going to continue. Adinda, let me know if we have anything else after this webinar. Let's recap what you have learned today and in this series and the important paradigm shifts that you have to implement in trading to be successful. If you are in pain of previous losses and made some psychological damage, don't worry about managing risk actively by moving stops. Try to get initial entries close to reversal points using smart money levels or dump money levels or any other method that it's really grounded in the way the market works. Okay, don't tell me indicators because they're not grounded. They're just statistical tables of calculated on historical data. They don't give you any information what's happening now in the market. Okay, and remember, Mark Douglas says fundamental truths of trading number 5. Every moment in the market is unique. So you need a system that and a method that is capable of saying who's behind a certain move, not just an indicator that does not know what's happening in the market. It just crunches numbers. Okay, that's very, very important. So when you use smart money and dump money value areas, then you can make the risk-free trade also as soon as possible, because when you trade in those levels that I mentioned before, right, we know that these are levels where smart money can come in and can give you a big, quick move that actually makes you risk-free very, very quickly. Okay. Now, even if you cut on your position, and that's what we would have taught you in part 2, risk-free trading, you have to cut part of your position. Okay, and some people, they don't like doing that because they say, well, if I cut my position where it's going my direction, then my gains will be smaller. Can you see here the trick, the focus on the gains rather than the focus on risk? So we need to focus on risk all the time. You will still be able to reach your objectives at 30% month or beyond by applying money management techniques. Review again in part 2 the secret one that I gave and I explained, and that's very, very important. Because if you take profits, partial profits, you can develop a more stable edge, of course, with a smaller overall expectancy, but a robust method that works and a simpler method as well. And then what you do, you use money management to magnify profits again. Okay, so you reduce your profits because you manage risk. You magnify your profits because you use advanced money management. Okay, now you can reach and exceed 30% in average by adding to trends as well with different techniques and using different risk-free strategies, or electing to take partial profits. Okay, so that you can get the money out of the markets even when the unpredictable happens. All right, and that's what I showed you in the example before. And then learn to read price rather than master indicators or expert advisors that will never be capable of trading the price the way you will when you're able to read the effects on price of these two big players. Okay, that's very important. I was having this conversation with Andrea Unger, the famous champion. He's a friend of mine. He's Italian. Andrea is a male name. If you don't know him, look for Andrea Unger. A few weeks back, and he has confirmed my view on EA. The way you will be able to do and trade, when you learn to model the two important groups of players, the smart money and the algorithms, that start and push the continuation of trends, and the dump money that models the trading crowd of losers who obstacle price or are late and lag price, the smart money. Now imagine what you can do when you have a higher reliability, because when you manage risk, you will get a lower expectancy, but you will get a higher reliability. And if you do not understand these measures, worry not. Again, go to fibstalkertrading.com. I'm writing it for you here, /free, and subscribe for the free coaching 6-hour course, and you'll understand all this I'm talking about here. But if you're able to capture the main trends on a weekly and daily time frames, and that can lead to several odds on the 4-hour and 1-hour time frames. Okay, so imagine being always in harmony with the flow and learning techniques that let you trade against the crowd. That's the paradigm shift you have to do, and that will help you to trade without fear. So most traders that I like on random acts of trading analysis and hope trading. I have to say that because in the past that's what I did as well. This is a recipe for further losses, income uncertainty, not being able to build wealth in the medium long term, and this is a cancer to your mind as well, because it nurtures self-doubt, anxiety, and it forces you to live miserably. It happened to me many times in the past. Keep doing mistakes, learning very slowly, a very unpleasant market experience, and very miserable state of mind as well, which, if you love trading, if you really want to succeed, you don't want to be in that. Okay, so this is the way I see many people seems to trade these days. They're part of the online trading team or groups. They read books, they do some self-study. Many people, especially those who come from successful careers, think they can solve the markets by themselves. That was myself. I mean, I used to work for Accenture as a project manager and IT architect. And my career was very quick at the time. When I was 34 years old, I was promoted project manager, and I believe that, and I had a passion for the markets, and I believe that you're welcome, Adam. I know that some of you must leave, but I'll continue until I'm stopped here. And Adinda, let me know if I can continue. I'll do until I can. And so this presentation is going to be a little bit longer, but I want to close here. But I see that some people might be leaving here. So what I'm going to do, I'm going to continue this in a part 4, so that everybody can enjoy this. And so I'll just close this video here. What I want to do is that if you if I'm also let me see here. So if you stay just one moment, I just want to say that I'm actually helping traders as well. I've opened up some time on my calendar over the next 72 hours to get on the phone with you and personally help you apply some of the strategies that I spoke in this series. And what we can do, this is a completely free, complimentary, and no pressure and relaxed call. For 45 minutes, we'll dig into everything that you're currently doing, and I'll help you discover the areas of improvement in your trading that are causing you to stay stuck. Okay, how it works. We will get some clarity on what you want your trading life to look like in the future. From there, I'll help you apply these strategies. I'm going to give you a game plan, and I'll work with you to craft a step-by-step plan so that you can reach your trading goals in 2018 and participate to the many setups offered by the market. This is completely free. It's 100% free. There is no cost on you. Now, I can help, but you have to have at least these requirements. You must have a basic understanding of trading and access to a trading account or willing to open a demo account. No wishy-washy, wishful thinking, ego. You must have an open mind if you want to do this call with me and if you want me to help you. You must be ready to work hard to take your trading to the next level now because you want to do that. If that sounds like you and you feel like you qualify, then book a session now. I mean, it's free, and the reasons why I'm doing this. Firstly, I sincerely enjoy working with traders and watching them grow and get the financial and lifestyle rewards that I can create. And people who know me know that I really love when the traders come back to me and say, I was able to reach these objectives. And some of these traders are also doing testing with prop trading boutiques that will fund them. So I can actually create these kind of rewards through my experience, hard work, proprietary research, and strategies. Second, you might want my help to take your trading to the next level. If that's the case, and if we think you qualify, then we can discuss how that works. If don't, or if we feel it's not a good fit, then we won't. And either way, it's cool because I know that in the call I've helped you. Okay, so if you are interested, you can go to phipstalkertrading.com/apply and apply for your complimentary trading breakthrough strategy sessions, a 45-minute session. What's the catch? It's free for you, but time is a factor. Okay, pick the appointment time that you like, fill out the short application, please do that, and do it now. I mean, it's just go to phipstalkertrading.com/apply. So the spots are limited because I have a limited time I can dedicate to this, and you can book a call now. So I want to thank you for staying with me in this third part of this webinar. There'll be a fourth part now, and we will complete our last steps. And I hope you enjoyed this. If you have any questions, you can always write me to phipstalker@gmail.com. And if you want to book a call and we can have a relaxed talk about your trading and how you're doing and what are the main issues. I'll give you also many breakthroughs during that call as well, and just let me know. Okay, thank you, Bobby, and thanks, Adam, Bobby, Jesus, Penny, Sandra, William, all of you. I suggest you watch part 1 and 2 as well. Okay, thanks for being here. I wish you a great day, and I'll see you on fxtrade.com. Bye bye now.